Welcome to ETH Daily, a daily briefing on the latest in Ethereum. Here's your latest for Monday, December 15, 2025. JPMorgan launches a tokenized fund on Ethereum. Matter Labs introduces ZK Sync managed services. A vote goes live to activate Lido V3 on mainnet, and BitMine holds close to 4 million Ether. All this and more starts right after this message. This episode is sponsored by Archive, an Ethereum-aligned data layer for Web3. Archive merges guarantees of blockchain with the performance and flexibility of traditional databases. Find out more at archive.network/daily. JPMorgan launched its first tokenized money market fund on Ethereum mainnet, coined the My On-Chain Net Yield Fund, or MONEY. The fund invests in low-risk, short-term assets such as U.S. Treasury securities and repurchase agreements. The fund was seeded with $100 million of JPMorgan's own capital, according to the Wall Street Journal. Built on JPMorgan's in-house Kinxie's digital assets platform, MONEY is a private placement available only to qualified institutional and high-net-worth investors. The minimum investment is $1 million. Investors can subscribe and redeem using cash or stablecoins like USDC, receiving tokenized shares delivered directly to their crypto wallets. Last month, JPMorgan launched JPMD, its bank-issued USD deposit token on Base mainnet. Matter Labs launched ZK Sync managed services, a new service offering ZK chains as a service directly operated by the ZK Sync development team. The service targets enterprises and financial institutions seeking to deploy custom, production-grade ZK stack chains without the burden of complex infrastructure management. The service provides infrastructure including dedicated RPCs, block explorers, indexers, and event delay. It also provides enterprises with the ability to precisely configure key system parameters such as data availability layer, gas token, MAV policy, and access permissions. A governance vote is now live to activate the first phase of Lido V3 on mainnet, a major upgrade that is transforming the protocol from a pooled staking model into a modular decentralized Ethereum staking infrastructure. At the core of Lido V3 is the introduction of staked vaults, which are non-custodial, customizable smart contracts that allow users to define their own validator setup. ST vaults support over-collateralized ST-ETH minting and feature critical safeguards such as immutable collateral caps and an escape hatch to opt out of protocol governance. If approved, the soft launch will deploy ST vaults for early partners. The vote is currently set to close on December 20th. And lastly, BitMine Immersion Technologies Inc. digital asset treasury now holds nearly 4 million ETH, representing over 3.2% of the total Ether supply. The holdings are valued at over $11 billion. BitMine continues its accumulation strategy, progressing towards its long-term goal of owning 5% of the total ETH supply, roughly 6 million Ether. Corporate treasuries collectively now hold more Ether than Ether ETFs. In other news, the Ethereum Foundation Enterprise team is looking to hire enterprise leads, Prism releases a post-mortem on its Fusaka bug, and the SEC releases self-custody guidance. This has been a roundup of today's top news stories in Ethereum. You can support this podcast by subscribing and following us at ETH Daily. Also subscribe to our newsletter at ethdaily.io.